I am the founder of TFL365.com. I am the host of the Traders Podcast. Years ago, it was known as Trader Radio, before there was such a thing as a podcast, before podcasts had been invented. And now that podcasts have been invented, we are in episode 340-something of the Traders Podcast. And do invite you to listen to that on iTunes. It's absolutely free. And now it is published 5 days a week. So would love for you to take a look at that. Today I want to talk to you about 3 counter-trend trades for 2015 that will blow your pants off. Or if you're wearing a dress, it will blow your dress off. Although that seems super inappropriate, and I don't really necessarily want anybody's dress or pants to blow off while we're on the webinar. That would definitely make your webinar experience a little bit colder, especially if you live on the East Coast. Ken's here from the Motor City. Nice to see you all. I am Rob Booker, and good morning. It's a little bit earlier for me. It's a Saturday. I don't usually get up this early on a Saturday. I get up way earlier than the rest of the week because I'm a currency trader, and I've been trading in the currency market for 15 years now. It's been a long time, so I love trading Forex. Now, today we'll also look at some stock charts and some other financial instruments. If you like oil, we'll take a look at oil, but primarily I make my money in the currency market. And I think it's important, I don't know what other people think about this, but I think it's important that if you're going to learn from somebody, that they actually trade a real account and that they're willing to show that account to you. Now, that might not be super popular, but I think it's important that you know that I'm a trader and that I actually trade a live account and that it's not a $1,000 account, and that it's real money and it's not fake, and that I practice what I preach, and that I'm going to show you my wins and losses. So I'm going to show you this week in currency trading. It was a good week. Last week wasn't as good. Last week was a couple $1,000s. This week I made about $33,000. The bulk of that came from a very long-term sell trade on the British pound. That was a $28,000 trade. Pound dollar also was a $9,000 trade. I lost $134 on a Euro Aussie, made 41 bucks. I have a robot that runs and makes $40 to $200 at a time. Pound Swiss lost 2,000, lost 1,400 on the pound dollar. Then I made a bunch of $41 trades, lost 400, made nothing. Few days this week were really tough for me. Lost 600, lost 1,800, lost 149, lost 459, made 976, made 280, lost 39, made 600, made 696. This was my nice trade on the pound Swiss. That was torquing me out for part of this week, but I finally got it. That's a counter trend trade that we'll talk about today. EuroCAD, that torqued me out. I made 928 bucks on that finally, and then ended the week with a couple more trades. A $247 winner on the Euro Aussie. I don't know what the final tally was, but it was between wins and losses, 33 to 35 or so $1,000. And it would have been more if I hadn't had just some nastiness going on with just a couple of those. I just could not get in sync at the very beginning of the week, and so I gave some money away at the beginning of the week. I generally make enough money to support myself. And this week was my breakout week for the year. Every year I kind of start slowly, and then I have a breakout week, and then I just start hammering it home. So I'm about to enter into a period of time where I'm just crushing it, and I'm really excited about that. I just feel like I'm in sync with the market. I'm a counter-trend trader by heart. It doesn't mean I lose a lot of money. It doesn't mean I hold my losses. You can see I took loss after loss after loss this week. I do not hold my losing trades. And I want you to know a little bit more about me in case you don't know me. I build methodical systems for making money. Trading is my primary business, but I do some other things on the side as well. I believe that you should and I should have methodical methodologies, methodical systems, step-by-step systems, checklist-based systems for making money. And I think that you ought to be able to verify with somebody who you're talking to that they're actually using those systems to make actual money. I just don't think that anything that you could learn from somebody is at all applicable if they're not actually using it and they're not actually making any money. It's a ridiculous premise. It just doesn't make any sense at all. You wouldn't hire an attorney that hadn't ever been in court. You just wouldn't do it. And so what most of this is based on is a method that I call Trifecta 4. Now, it's not even for sale. I'm not trying to sell you this. This entire presentation is going to give you a ton of information, and I don't want any money from you. I don't care if you give me $1. It doesn't matter to me at all. I'm going to be just fine. If you buy something from me or not is not going to change my standard of living. It's not going to change my standard of living. It might change your standard of living, but it's not going to change mine. But I want you to know this is the way that I trade. It's been the way that I trade for a very long time, and it's in its 4th installment, coming up on its 5th. And as time goes on, I refine this trading system. I call it Trifecta because it's made up of 3 parts, and I will speak to you about all 3 parts today. And I will discuss those 3 parts with you. There's a counter trend trading element to Trifecta, and there is a trend trading element to Trifecta. We're going to focus on the counter trend trading element of that today. Now I want to give you and speak to you about counter trend trading. It gets a bad reputation out there, and I think for good reason most of the time, because counter trend trading is traditionally lumped in with holding your losing trades. And I want to make it really abundantly clear, I do not advise you to hold your losing trades. I don't advise you to do that. In fact, I advise you to cut off your losing trades with savage, ruthless death threats to your losing trades. I think your losing trades should be thought of as a thief that is breaking into your house in the middle of the night and you have to grab a baseball bat and smash their head off. Or if you're a pacifist, you have to call your neighbor to come over and smash them into pieces or whatever. But I advise you that you need to cut your losing trades off with savage ruthlessness. And let me just ask you a question. So we're all having a good time here, and we're all here on a Saturday morning, and I'm super happy that you're here and you're spending your time with me. What would you like to have your last 5 biggest losing trades of your entire trading career? Would you like to have those back? I'd like to have mine back. Mine were $50,000 on the dollar yen, $33,000 on the dollar Swiss. I lost 40-something dollars on the pound Swiss one time. Those just come off the top of my head. Would I like to have those trades back? Would anybody here like to have? Would anybody like to have those trades back if you lost? I don't know if you would, but you can nod your head. I can't see you, but man, I would like to have those back. Would you like to have would you like to have the best trade you ever took for a modest profit? Let's just say it was a very small gain, but it just felt easy. Would you like to have 1,000 more of those in the future? Yeah. That's what we're really striving for. We're striving to never take that big loss ever again and then have consistent performance over time. I'm not here today to tell you that I'm going to give you the magic secret for that. I'm going to be actually probably as honest with you as anybody's ever been in a webinar. There is no secret. The secret that is that there is no secret. The secret is, here it is, here's the secret, and you don't have to pay anything for it. The secret is, do not take a big loss. Ever. That's the secret. That's it. If you can do that, actually, you will survive. I was the chief market strategist at Interbank FX. I had access to every trade taken by every trader on an anonymous basis. I could look through the entire system. There is exactly one characteristic in common with every trader who failed. One characteristic. And that one characteristic was they ran out of money. That's it. That's it. That's the only way you fail as a trader is you run out of money. Every single trader in the database who didn't run out of money and who could persist past the 6-month, the 12-month mark, something happened to the people that lasted that long. They just stopped trading like drunken monkeys. It's totally awesome. Absolutely incredible. Never, ever, 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 ever take a big loss. That's it. If you're carrying a big loss right now, get some help. Talk to somebody about it. Get some help from an expert and get out of that trade. It may require you to take the loss and move on. Never, ever, 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 ever set yourself up to take a big loss. I mean, I'm telling you, I know that you're here to learn a strategy, and I'm going to teach you something that works. But it's only going to be applicable to those of you that don't want to hold your losing trades. If you want to hold on to your losing trades, we might as well talk about gardening right now or something else. We might as well talk about smoking marijuana because you're going to need something to calm you down after you take your big loss. All right. Let's talk more about counter trend trading now, because I've made my point very clear. Have you ever started a relationship with a person and everything seemed to be going really good at the beginning? They're beautiful, you laugh together, it just seems like a fit, and then they became super crazy? Yeah, that's happened to me. Definitely that's happened to me. I'm going to mute my microphone just for 1 second. My allergies are in full swing, so I just needed to blow my nose and thought I might do that off microphone. Okay, so you go out with somebody and they're beautiful and they're sexy and you like them and they're friendly and they have the right color hair that you like so much, and then they become super crazy. Like after everything settles in and everything seems to be going pretty well, you realize that they're a total nut person. Yeah, that's pretty frustrating, isn't it? Well, that's a lot like trend trading. It's awesome. It's even awesome for a super long time. And it's just what you're supposed to do. It's just what you were looking for your whole life. But I'm just saying that you need to watch out for the occasional crazy person trend. You know, that end of the trend situation where everything seems to be going well. You're doing exactly what everyone said you were supposed to do. You met the person at church. They had blonde hair just like you always wanted, and all of a sudden you wake up one day and their hair is purple and their eyes are all bugged out and they're crazy. That's what a trend is like. It's what Michael Covell tells you to do, and then one day you're just holding on to a trend trade and the trend trade is just beating you. It's like Fight Club and it's just smashing your head in. But you're doing it to yourself just like in Fight Club because you're the person that's in the trade. Now, I'm not saying trend trading is wrong. I love trend trading. In fact, at the end of this presentation, I'm gonna show you where you can get some training that on the way that I do trend trading. I think trend trading is awesome, but I think that counter trend trading has a place as well when the trend has exhausted itself. All trends come to an end, and this is not about picking bottoms. I remember the ancient Chinese proverb, "He who pick bottom gets stinky finger," right? We're not here to pick bottoms. That's not what we're going to do. But I do want to show you, I want to show you 3 trades, at least 3 trades, that I think you could consider for 2015 that are counter trend trades and have come at the end of what is essentially a savage and gigantic trend that has lasted a long time. So here we go. Everybody ready for that? Everybody want to see some awesome trades coming up here? If you're interested in looking at some cool trades, Karen says yes. Yeah, George says yes. Ray says yes. Nice to see you all here. Great. I'm super happy to get some feedback from you all. Feedback. Bill says yes. Carol says yes. All right, let's do this. Let's do this thing. I'm so happy to be here with you. I love traders. I love talking to you about I love talking to you about taking trades. I love it. All right, this is the New Zealand dollar, US dollar. If you like milk, this is the currency pair for you. This is the daily chart. Now we're not even close to running out of time, so I have some time to discuss with you this situation here. Now the New Zealand economy has been, you know, reasonably beaten down. You know, worries about China and whatever. Let's do central bank interest rate table. I bet there's one on world interest rates. Perfect. This is the one I want at fxstreet.com. No, I do not want to fill out your broker form. Okay, here we go. Central banks overview. Let's see if I can increase the size of this page here. Let's see here. That's proving to be a little bit more difficult than I imagined it would be, but that's fine. Who cares? All right, Bank of Canada, 0.75. Bank of England, 0.5. Bank of Japan, 0.1. Boy, would I love to get a mortgage from the Bank of Japan. European Central Bank, 0.05. Goodbye. Can you believe that Europe's below Japan? Lame-o. Federal Reserve, 0.25. Reserve Bank of Australia, what? 2.25? What you talking about, Willis? What in the world? Reserve Bank of New Zealand, 3.5. Look at that. Of all the developed nations, major central banks, the Reserve Bank of New Zealand is paying 3.5%. Wait a minute. And the Swiss National Bank is paying negative 0.750. 0.0. Now, I want you to suppose, for the purposes of this conversation, that the Swiss National Bank is now just a chain of donut shops and does not involve you and me at all in the world of currency trading. All right? Because they're just a bunch of crack-smoking weirdos over there. So we're going to look at them a little bit later on, but we're only going to consider Swiss National Bank stuff when it deals with intraday short-term trades. All right. Reserve Bank of New Zealand, 3.5%. That means that New Zealand deposits pay a pretty hefty interest rate when compared to most of the major currencies of the world. And still the same, the New Zealand dollar has been getting the shiz kicked out of it. Now, that doesn't seem fair. If you want to know what drives long-term patterns in the currency markets, it's interest rates. Long-term patterns, not intraday patterns. Nobody ever made any money on intraday currency trades by focusing on interest rates. But when you look at the long-term charts, the daily chart, for example, here, long-term, currencies move in relation to each other based on interest rates. And the fact that New Zealand pays a 3.5% interest rate and the U.S. pays a lower interest rate and other nations of the world pay a lower interest rate means that at some point in time on the long-term charts, in the year 2015 even, we're going to see a change. We're going to see that people finally want to make some interest on their deposits. And they're going to start seeking after returns that are based on interest rates. And here's one of those opportunities. The New Zealand dollar, US dollar, has been falling in a savage downward trend. Every time it prints divergence that suggests that perhaps we could see a move upward, we don't see it. And then finally, we started picking ourselves up off the bottom. Now, I call this Class A. It's when we get a divergence set up, and I'll talk to you about this divergence in just a moment, and then we break the lows of that divergence, go sideways, and then come up off the bottom. If you've ever seen a cup and handle pattern, it's kind of similar to that, but I just call it Class A divergence. Now, I want to give you an introduction to what you're looking at on the chart from start to finish. First, you're looking at tradingview.com charts. I'll give you a link to this at the end of the presentation. These are free web-based charts. You're also looking at Knoxville Divergence. Knoxville Divergence are these red lines on the chart right now, and they suggest a reversal when they appear. They don't promise a reversal, but they suggest a reversal. Now, I need to tell you where that comes from, and it will take me just a moment to do that. Well, I didn't know the background on this chart was dark. Do I have a white one? No, I do not. All right. Well, we'll just work with this. Let's see if I could change the color theme here. All right, that's a little bit better. Make those lines a little thicker. And I'll make this color. There we go. All right. Knoxville Divergence is based upon, and let's do something that everybody here might like oil. And I'll change the settings on my Knoxville Divergence to 30. All right, I built an indicator. And this indicator is called Knoxville Divergence because I built it while sitting in a coffee shop in Knoxville, Tennessee, while I was driving across the country and sleeping overnight at traders' houses. Now, what Knoxville Divergence does looks for price to be falling at the same time that the momentum indicator is rising. The momentum indicator is set to 20. Now, over the course of the same time that the price is falling and the momentum indicator is rising, the relative strength index set to 21 has dropped into oversold territory. So what you have going on is you have price falling, but momentum is showing that enthusiasm for that price falling is dissipating. The rate at which it is falling has slowed, and that means that essentially market participants are not as interested in selling oil as they were just a little while ago, and it's slowing down and possibly even reversing. Then you get the relative strength index go into oversold territory below 30, and that means that we are about to possibly see a reversal and a move in the opposite direction. Now, the other side is true for bearishness. We get price rising, the momentum indicator falling across the same stretch of candles, and the relative strength index pokes above the overbought territory. Now, this indicator is available on tradingview.com charts. I'll show you a link to get it for free on MetaTrader and other charting platforms, but it is also available on tradingview.com charts. I have an agreement with them where they do programming work for me, and then in return they can sell some indicators for like $10 or something like that on their platform. But that's Knoxville Divergence. Knoxville Divergence is the disagreement between price and an indicator. So let's get rid of all the drawing tools on my chart, and let's just clean this business up, and let's look at this. We had on the daily chart 2 suggestions that price had fallen far enough. Then price fell even further, went sideways, and started to rise. This is a fascinating turn of events. This is incredibly fascinating that candles are now making higher highs and possibly even higher lows and rising. I want to say, first of all, that the New Zealand dollar, US dollar, is one of the possible counter-trend trade stories of 2015. What I'm going to do next is show you where it might go. This is the 2015 yearly pivot. A yearly pivot is created from the high of last year plus the low of last year plus the closing price of last year on the New Zealand dollar divided by 3. This price plus this price plus this price added together and divided by 3 that creates a yearly pivot. Most yearly pivots are hit in the year they are created. And the New Zealand dollar US dollar is no different. That means the New Zealand dollar US dollar has about 500 points of movement upward that it can take this year in 2015. Now, we've got a fundamental reason why that would make sense. Because deposits in New Zealand are going to pay more than deposits in the United States. Even with an interest rate picture in the U.S. that appears to be rising, the moment they seem to take their foot off the gas, the perception that Janet Yellen is backing off a little bit is going to push this pair up very fast. Counter-trend trades that are profitable move really quickly. So how might you go about taking a trade like this? Well, let's Let's pull up a chart here. I'll pull up a shorter time frame chart, and I'll show you what kinds of things that I'm looking for on a short-term time frame chart for those of you that are interested. What I'm looking for on shorter time frame charts is, not surprising, I'm looking for that divergence on the 1 hour chart. I'm looking for these Knoxville Divergence signals on the 1 hour chart. And when those signals occur, I'm looking for opportunities to buy. And I simply draw trend lines to do things like this. Knoxville Divergence comes along, it breaks a trend line, candles start bullish, and then I start accumulating buy trades on these kinds of currency pairs. And then as it moves upward, I look for dips, then the creation of more divergence, and then movement upward. It's really simple. It's really straightforward. I look at the trade that I'm wanting to take on a longer time frame chart, and then I look to buy or sell it on dips or pullbacks on a shorter time frame chart. Mark my words, this has the potential to move a very, very, very long way. Now let's look at another long-term, big picture opportunity in 2015. I'm going to pause again and blow my nose. Is everybody having a good time? Okay, so Kaylin says not getting any sound. Well, I can't tell you anything. All right, are you having a good time? I'm having a good time. I hope that me starting off this webinar series today doesn't ruin it for the rest of the day, because I bet there's a bunch of other great stuff coming up today. So I hope you're having a really good time. Hi, Joan, and hi, Zenit. And super happy to be spending some time with you. All right, US dollar, Japanese yen. Here we go. This is really interesting. Now, everybody has been buying the dollar Japanese yen. Everybody come along for the ride. Everybody's been buying dollar Japanese yen. For the whole of last year, all this thing did was go up. Boom, boom, chakalaka. And look what happened over the course of the last 2 years. In 2013, we missed the yearly pivot. The yearly pivot was never hit. In 2014, the yearly pivot was never hit. In 2015, we're not going to miss the yearly pivot. It's not going to happen. The yearly pivot is not going to be missed in 2015. It's just not going to happen. Statistically speaking, the US dollar Japanese yen needs to fall 500 points. It needs to do it. It just needs to fall. It needs to hit the yearly pivot for 2015. Let me walk you through a set of reasons why this makes a ton of sense. We've got multiple divergences that occurred on the daily chart over the course of the last 12 months. And we just got another one of those in December of 2014. And we got a trend line drawn on the charts, and we're breaking that trend line now. This is a counter trend trade. There are very few people that believe that this is a reasonable trade to take. Haha, those are always the best trades. The trend traders are possibly going to get they're possibly going to get smashed up into a lot of pieces here if this goes down. And what happens when trend traders that have been buying, what happens when they get stopped out? What is the opposite of a buy trade? A sell trade. When they get stopped out, it's a sell trade. So what you have is the counter trend traders organically selling, meaning taking sell positions to initiate their position. And then you get trend traders getting stopped out, and they're buying. When they get stopped out, they have to buy to close out their sell trades. So you have natural sell trades taken by people like me, and then you have stop-out buy trades taken by the trend traders who don't have any choice. That's a lot of selling pressure. That's called a short squeeze. It's when the people like me team up with the people getting stopped out. and this thing starts to take a real run downward. And all you need is one really bad data point that makes everybody think that the Fed isn't going to raise interest rates until 2016. Who cares if they really are or they're not? That's not the point. So how do we take a trade like this? Once again, we drop down to the 1 hour chart. Now, one of you said, I'm having a lot of trouble in the currency market. The market is moving so fast, I keep getting stopped out. All right, well, there's nothing wrong with getting stopped out, actually. Let me show you a way that you could take a trade where this would not be such a concern. Let's actually go down to like a 15-minute chart on the US dollar Japanese yen. All right, here we are on the US dollar Japanese yen on the 15-minute chart. Now, what I'm going to look for on the 15-minute chart is I'm going to look for movement on the 15-minute or the 1 hour chart that produces this bearish divergence. Here we go. There's this bearish divergence right here. Now, it's not going to happen very often, but when it happens, it is going to be amazing. So what you would do in a situation like this, for those of you that are worried about, the currency market moving so much, is number one, you reduce the size of your trade. Number two, you can take a trade on the break of a trend line after the divergence is formed. And number three, you put a stop loss above the highs. And you just stop out of that. If that goes above your stop loss, you just stop out. Now, that's not going to be 200 points. That's going to be like 50. If you're losing 200 points on a trade in the currency market, 200 pips, then something's going horribly wrong. Or your entries just need some refinement, and that's what I'm here to do for you and with you. Now, the other time you can sell the US dollar Japanese yen, sorry about that, I just drew a line across the screen. The other time you can do it is on the 60-minute chart when you see divergence. And then you draw a trend line, and then you sell on the break of that trend line. The other time that you can sell the US dollar Japanese yen is whenever it rises up and hits a level of support or resistance, in this case resistance, like a weekly pivot. And you can sell at that level and watch this thing go down. So where would I sell next the US dollar Japanese yen? Well, one, I would pick a level like this, 120.20, yet last week's weekly pivot, and I would look for bearish divergence on the 15-minute chart or on the 60-minute chart, or just a hit and a reversal against this weekly pivot, or I would simply take a trade on a breakout below the lows that it has made so far. Now, next week we have, if I'm not mistaken, I do have a tenuous relationship with the time-space continuum. I do believe that next week we have the non-farm payroll report. That could set the tone for some bearish movement in the US dollar, Japanese yen. I'm not promising that that's going to happen. It could go up instead of down, in which case we just stop out really quickly. That would be totally awesome. But this currency pair needs to take a chill pill. After we fall to the 2015 yearly pivot, then I want to buy the ever-loving crap out of this. I think that would be awesome. All right, let's look at oil. Oil on the daily chart is doing the same thing. Divergences, a move lower, sideways movement, and possibly bottoming out and getting ready to move up. Now, I don't know about you, but I'm not a real fan of losing savage amounts of money. I hate losing money. I hate it. So once again, even if I predict that the oil rising could be a surprising trend near the end of 2015, so a counter trend trade for sure, this would be the ultimate counter trend trade. Even if I'm predicting that, I'm not saying I want to lose a bunch of money to see if I'm right, but I do think, well, I don't think this. I am absolutely willing to watch oil from the 60-minute and the 15-minute chart and buy oil on these charts on bullish divergence and a break of a trend line. So if oil can drop again and it will do this, and print bullish divergence and break a trend line, then I would like the chance to buy oil. Now that makes me look like a complete idiot. That makes me look like a total idiot buying oil. To a trend trader, that is the stupidest thing they've ever heard. Now, I've never made any money doing what exactly everybody else thought I should do. And I've never made any money following somebody else into a stupid trade that they were passionate about. I've only made money when I did one thing, when I obeyed one rule. And can anybody ever guess what that one rule is? Can you guess what that one rule is? What's the one rule? This might be a trick question. But Abby, Andy, anybody out there? Commander Thomas Sanders, anybody? Harvey, James? Can anybody guess what that one rule is? Yes. It's don't take a big loss. That's exactly right. That's the only way I've ever made any money. It's not by following somebody else or getting latched onto some stupid idea that somebody like me. Listen, I'm just a windbag blowhard. I might make a bunch of money. I made $255,000, $260,000 last year trading the currency market. I'll make $300,000 to $500,000 this year doing the same. Okay, like I know how to make money trading. I don't make as much as some, but I make a whole lot more than others. I still don't think you ought to just do whatever I say. I still think you ought to obey the first rule. If I say that this looks like a good trade, I'm not saying you should lose a bunch of money taking it. I think you should stop out really quickly if something goes wrong. And I showed you how to do it. You put a stop loss underneath those lows, and you reduce the size of your trade. I think oil can rise to, let me give you a price. I think oil this year can potentially rise to the missed monthly pivot for January 2015 at 58. Now, at that time, I would not be surprised to see oil fall back down because supply is stretching further than demand. But oil could go all the way to its yearly pivot at 70. I think that's a little bit far-fetched, but you know, supply is outstretching demand. And a temporary move, $10 up, that's not hard for oil to do. That's not difficult for oil to do, especially if there's growing tension in the Middle East. Not a problem. Not a problem for oil. However, trend traders think that this is a stupid idea. Trend traders think that this is dumb. Now, trend trading was the smartest thing in the world all over here. It was great. I'm not against trend trading. I'm going to show you a link to a trend trading methodology at the end of this presentation. I'm not against trend trading. I'm against trend trading at the end of the friggin' trend. That's when I'm against it. This price movement looks a lot different than this. We're not in the same market conditions. It's not the same anymore. When everybody thinks that oil is falling to 20 bucks, that's the time you don't want to trade oil anymore. When everybody agrees that oil is falling, that's when you don't want to do it anymore. Now there's some disagreement, a little bit of disagreement, barely creeping in. And I think that on the short-term charts, the 60-minute and the 15-minute charts, if you can find bullish divergence on oil, I think that you can responsibly take a small trade in the direction of that divergence on a trendline break with a very tight stop below the lows. I think oil could print bullish divergence on the 15-minute chart, and I see no reason why we couldn't take a small trade on a break of a trend line with a tight stop and a giant profit target. Now, that's a way to have a lot of fun. Now, the big question is, what about the stock market? What about the Dow Jones Industrial Average or the S&P 500? One last comment about the S&P 500. This has been a rocket ship fueled by venture capital money poured into photo sharing applications used by teenagers. The U.S. stock market isn't even still printing divergences. It's completely out of control. It's totally out of control. I mean, it hasn't printed a divergence on the daily chart since 2012 in August. When it finally does print said divergence, I will be interested. But I'm beginning to be interested even without the divergence. I'm looking at this trend line on the daily chart. And I'm beginning to think that a counter trend trade on the U.S. stock market is going to be a possible play in 2015. but I just don't have the divergence to back it up. I don't have it. Now, if I were to, on the 15-minute chart, occasionally get a bearish divergence set up on the 15-minute chart on the S&P, I would potentially think about a very short-term trade. But until the daily chart becomes divergent, I think your best course of action is to just keep buying it, not get out of the way of that trend. And that's the difference. We have not printed a long-term sell signal for me. Now, we are breaking through this trend line, so I do think that there is some possible sideways movement in store for the U.S. stock market. We could look, we have just enough time to maybe look at a couple. I don't know, does anybody have a favorite stock? Does anybody have a favorite stock? If you've got, okay, Tesla. I'll look at Tesla, Apple, Tesla. Apple's going to be the first trillion-dollar company. Here's Tesla on the daily chart. Once again, there's a daily divergence leading to a change of direction if a trend line is broken. Once the trend line was broken here on Tesla, every time you had divergence on a short-term chart, you could sell Tesla. Very similar. Apple's a little bit difficult because Apple is going to be a trillion-dollar company, and Apple prints divergence and still goes up. I think the release of the watch will print the Apple Watch daily pattern, a W. So we got the part of the W is done, and then I think we could fall from there. Maybe we could print divergence on the Apple daily W chart pattern. That is a chart pattern that I just made up. But you got to remember, Apple is probably the hardest company in the world to sell. Not really advisable to get involved with that unless you can find something that I just don't see is evident about Apple. I have time for a couple more. BABA. I don't know what BABA is. Let's see what BABA looks like on the daily chart. And then I got to wrap this up. There's no chart. There's no trade. Oh, Alibaba. I don't have enough data on Alibaba to give you a trade. Salesforce, CRM. You know, Salesforce is a really interesting company. Let's take a look at Salesforce. Yeah, look at that. There's no divergence on the daily chart. And until I see some divergence on the daily chart, I got to tell you, the trend for me in that case remains up. And on Salesforce, what I would look for is I would look for the opportunity to buy this on bullish divergences on those short-term charts, which don't appear very often, but when they do, they are incredible trades. Knoxville Divergence with the trend can be really beautiful. Oh, we just got one recently. Look at that. That's exactly what I'm talking about. You see that? Does everybody see that? That's really nice. All right, did you have a good time? Did everybody have a good time today? I just want to hear a yes or a no. If you did not have a good time, I'm perfectly able to take it. I am a grown man if you did not have a good time. I hope you had a good time. I really love spending time with you. All right, where can you get the indicator? The Knoxville Divergence Indicator is downloadable at j.mp. Let me type this into the webinar software, j.mp/rob-trend. Okay? Everybody got that link right there? j.mp/rob-trend. You can get the indicator for MetaTrader and a variety of other charting platforms at that link. Now, if you want to use tradingview.com, which is my favorite thing in the whole world, I strongly endorse them. The charts are free. My indicators are like $10 or $12 a month, but the charts are free, and they are beautiful. They go with you everywhere. You pull them up at home, you can see them at work, and you can see your whole setup at work. Everything is just totally beautiful. And you can get my indicators on tradingview.com at http blah 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 /Booker Studies, and I'll plug that into the link inside the webinar software. So in the webinar software, you're seeing a link pop up there for that as well. But you can get the indicators at rob-trend, and that will take you to a page that looks like, you will see a page that looks like this, and then I'm going to wrap up my, let's see here. a page that looks like this. And you click on download now, and then you'll be given an offer to do some training for like $7 about the indicator and whatever else.